Today we are talking about an ETF that is absolutely crushing the market, the Vanguard Communication Services ETF with ticker symbol VOX. This ETF is packed with some of the biggest and most powerful companies in the world, and it has been outperforming the S&P 500 index for quite some time. And guess what? It might continue to do so in the future as well. So let's break it all down and see why this ETF is doing so well, what is inside it, and whether it's worth buying right now. So let's get started. Thank you again for joining me today. I am Pankaj. As always, everything shared in this video is for informational purposes only. And if you find any value in this content, please hit the like button. So what exactly is this ETF? The Vanguard Communication Services ETF VOX is an exchange-traded fund that focuses on companies in the communication sector. That means it includes businesses that provide internet services, social media platforms, entertainment, telecom services, and more. Now here is the best part. This ETF is super cheap to own. The expense ratio is just 0.09%, which means you only pay $9 for every $10,000 invested. That's almost nothing when compared to what some of the actively fund manager is charging. And despite being low cost, it has been delivering amazing returns, even better than the broader stock market. So why is this ETF doing so well? One big reason is that almost half of the fund is made up of just two tech giants, Meta Platforms and Alphabet. These two companies are huge and incredibly profitable. They dominate the digital advertising space and have business models that generate a lot of cash. So let's talk about these two companies and why they are so important. Meta Platforms, which owns Facebook, Instagram, WhatsApp, and Messenger, made almost $164 billion in revenues in 2024. But the best part is their operating income margin was almost 48%. That means for every $1 they make, they keep more than half as profit. That is really high compared to most companies. And then there is Alphabet, the parent company of Google and YouTube. Alphabet brought in a massive $350 billion in revenues in 2024 with an operating margin of almost 32%. Both of these companies are cash machines because they don't have to spend billions on producing content or any physical products or maintaining huge infrastructures like telecom companies. Instead, they make money from advertising on platforms that billions of people use every day. And what's even more better, these companies are still growing. When we look at its holding, half of the holding is made up of Meta and Alphabet. There are other big names also in the top 10 holdings. This ETF also holds Netflix, Disney, and Comcast, which are all media giants. They hold around 12% of the fund. It also includes AT&T, Verizon, and T-Mobile, the biggest telecom companies in the US. They hold around 11% of the fund. So in summary, top 10 holdings have almost 72% weightage in the fund. So while this fund is heavily weighted towards Meta and Alphabet, you do get exposure to some other big names as well. So is this ETF a good investment right now? Well, even after all the gains we have seen in 2024 and early 2025, Meta and Alphabet are still not that expensive compared to other mega cap tech stocks. For example, Meta has a price to earning ratio of about 28, which is actually lower than some other tech giants. Alphabet is even cheaper with a forward PE ratio of just 20. That means investors are not overpaying for these stocks even though they have gone up a lot. And let's not forget, both companies are heavily investing in AI. Alphabet is integrating AI into Google search and expanding its cloud business, while Meta is spending $65 billion on AI to improve its platforms and advertising business. These investments could drive even more growth in the future, which means this ETF could continue outperforming the market. So should you buy the Vanguard Communication Sector ETF? If you believe in Meta, Alphabet, and the power of digital advertising, then this ETF is a great way to invest in those companies while also getting a little diversification. It has a low expense ratio, high growth potential, and a history of beating S&P 500. So if you are looking for an easy way to invest in some of the biggest tech giants without picking individual stocks, this could be a smart choice. What do you think? Are you investing in this ETF? Let me know in the comment section below. And if you found this video helpful, don't forget to like this video and subscribe to the channel. See you in the next video.